I want to take a look at how this morning's core PCE could impact the Fed. I want to bring in former Fed Vice Chairman Roger Ferguson. He's now Vice Chairman of the Business Council, a CNBC contributor. I want to thank him for joining us. And as I said at the tease, you have been right pretty much across the board about what the Fed would do. So I'll ask you the question. The Fed reads this new data, and what will the Fed do?
Look, I think they'll look at this and say, fortunately not bad news, as in inflation didn't tick up again. But on the other side, it hasn't really moved down dramatically either. So I think this is a status quo kind of read. They've been saying for a period of time that they want to see, several months. Some of them said many months of data moving in the right direction. So this one, I think they look at it and say, well, it didn't go, it's not worse, but it's not necessarily going to change this perspective that we need to wait to see more data coming in to give us a solid sense that inflation is moving down closer to 2%.
What have you thought about some of the comments we've heard from people like Neil Kashkari in the last week with this idea that rate hikes are on the table?
I don't think rate hikes are on the table, as in if the next couple of meetings are going to be talking about that. I think what he is suggesting is appropriate, which is let's see exactly how restrictive we are. If, in fact, inflation stays at 2.7, maybe gets to 2.6, but doesn't seem to be coming down, maybe it will be time to think about raising rates yet again, and recognize that this is against the backdrop of an economy in which the labor force and labor market is actually showing, good strength, given how much the Fed has done. So I don't think it's fair to say it's an active discussion, but I think what President Kashkari might be indicating is, as this unfolds, if we don't see further progress, we should be open, or they should be open, to making another hiking move if need be to really get inflation solidly heading down towards that 2%.
When you look out for the rest of the year, what do you see happening?
Look, I think vis-a-vis inflation, probably moving roughly sideways, maybe if we're lucky down a little bit. I've been in the position that thinks it's 50-50 as to whether I will see any hikes, any cuts at all this year. I don't think a hike is likely, but it's not impossible. And so, unfortunately, what we have right now may well be what we get for a period of time.
Right. Have you been surprised? The market obviously thinks that there's two cuts in the offing. I think that's the current view. Did you understand why they have that view? And the view is partially that they think that Jay Powell is somehow predisposed to cutting, that if he's desperate to cut if he could.
Yeah, I do think the market has that view. I think the Fed has suggested that their next move is likely to be down. Obviously, also the market, generally speaking, feels better if inflation is under control, but also if interest rates are lower. So to some degree, it's a bit of optimism. I actually think, as we've seen, the market has been wrong, relatively consistently, expecting 5 or 6 cuts, then 4, then 3, now finally down to 2. I think they're reluctantly coming in line with the real data, and reluctantly, I think, listening to policymakers that say, they may want to cut, but the data has to give them, I would use the word, permission to cut, which it hasn't done thus far.
I know you're a macro sort of a guy. I know you're not necessarily an equities person per se, but we've watched the equities market move much higher, and then actually even in the past week just sort of flip that script, in part, I think, on the basis of this sort of shifting view. What do you make of the way the equity markets have managed through this to the extent they have, and sort of this AI piece, which I don't know if that's an idiosyncratic sort of separate thing that's happening on one end and just about everything else?
So first, yes, you have observed that there are a small handful of companies that have been driving the indices higher, and that's being driven by AI. And I think it's a net positive thing. It shows a lot of vibrancy in the U.S. economy. Overall, I'd say the market is respecting the fact that the economy is actually in pretty good shape. And in fact, while the Fed has been pretty aggressive, they haven't tanked the economy. We're still looking at unemployment that is at relatively good levels. So I think the market's telling us two things: interesting tech move in the world of AI, big names there that are moving the indices. And secondly, overall, given how much the Fed's done, the economy's holding up pretty well. And therefore, I think equity valuations are likely to drift a little bit higher if any direction at all.
Roger, if it wasn't an election year, would there be any reason at all, given where we are in the economy, to even be talking about rate cuts?
No, I take off the election year comment. I think in general, there's a reason to talk about rate cuts, in part because the Fed has been very aggressive. They think they're in a tightening mode or restrictive territory. And normally, if inflation coming down, they should be talking about cuts. But, I think the issue is pulling the trigger. And that one, I think, is going to be very, very data dependent. And as I said, to me, 50-50 that the data will give them permission to do a cut. But I think
Go ahead, sorry. No, go ahead.
No, I do think it's fair to recognize that what they're talking about has to do with the macro environment as opposed to sort of the political environment.
Steve Leisman was with us just a short time ago when the PCE came out, and his point was Europe's looking to cut interest rates potentially next week, and that could happen under a similar level of inflation, 2.4%. But our economy is pretty different.
I agree with you. Our economy is different. I think things are just much more robust here than they are in Europe. We've got, dynamism that we just talked about. And our unemployment number is still looking pretty good. So this may be a point of disconnect between us and the Europeans. At the end of the day, we have to do what we think is, our policymakers have to do what they think is right for our economic situation, which is not exactly the same as yours, as you point out, Becky.